If you want to finally make consistent profits in 2025, 2026, stop using 10 different strategies. This one strategy is simple, tested, and works in any market. So let me break down in less than 5 minutes. So this strategy, it is a trend plus pullback entry. We shall use 15-minute time frame to 5-minute time frame. And the tools we shall need a 200 exponential moving average for trend direction. So now these are some of the entry rules that we shall follow, right? So first, you have to keep it simple, okay? And also price above the 200 exponential moving average, we shall only look for buy, and the opposite is the truth, okay? And we shall see when the price pulls back to a small demand zone, okay? We shall always buy. And the bearish candle closes, we shall enter whenever we see the bearish candles when it has closed, okay? So now this is it. So let's first add our 200 exponential moving average, guys, right? And you see it, let's first edit it here. Remember, it is a 200 exponential moving average. So we can decide to edit it here. On the length, you have to put the 200, of course, because it is a 200 exponential moving average, right? So for the color, we can leave it there, right? So we said we shall only trade when it is trending. Can you see this? This is a 15-minute time frame. Can you see all this market, how it is moving down this 200 exponential moving average? And this is a signal for a sell, because now it is moving below our 200 exponential moving average. Okay, so now we shall always wait for the pullback to our moving average, right? So it is right here. Okay, example here, you can see that when the market pulled back right here. Okay, let me show you right here. Pay attention on this, please, and don't skip anything, because this one, it will really help you, guys. You can see a pullback right here to our exponential moving average, but on this pullback up here, there was a supply zone. Up there was supply zone, okay? So now you can see that when it pulled back, we say that we can wait for the candle close below our exponential moving average, okay? Now here we shall look for bearish candle, entry candles. For example, now here you can see that it has made a doji candle, right? When it reached right here, it really made a doji candle. You can see, let me show it to you guys, right? So this is a doji candle right here. That one in the middle, that bearish candle, it is a doji candle. It is a signal for a sell, guys, okay? So that is a signal for a sell. So let's get another example. I show you that it is really working perfectly, right? So now here, let's see when the market came back to your when the market came back to your moving average right here. Remember, there was now a supply zone right here, okay? There was a supply zone right here that we were looking at, right? So then now the market had to come to our supply zone, and remember, there was a moving average, right? So it came back right here. You can see that it first actually gave us a bullish candle, and after it gave us what we call an insider candle here, because this bearish candle, it actually closed below our moving average, and this was a signal for our sell, okay? So now this is our TP and the sell loss, where we put the TP and the sell loss. Always when you are entering the market, you have to know where to put your stop loss and the take profit, right? So now, for example, here, when you enter a short position immediately after this candle closing below that moving average, we always put our stop loss just above our moving average, and we always put on the recent low right here, our TP, okay? Can you see this? When it came here, it really showed you a very nice signal, and I talked about these bearish signals. You can watch the video. It actually gave us a bearish engulfing candlestick pattern here. This one, it engulfed all this, right? And it did all this on our moving average. After engulfing this, of course, traders would just come immediately and they enter their short positions, right? So now a trader would just come immediately and you enter your short position. After entering, you always have to put your stop loss just above that. Then you target a 1, 2, 2 or a 1, 2, 3 risk reward. Can you see that this is a buying opportunity. Why? Because the market, it is above your moving average, guys. It will come back to your moving average. It gives you your buying opportunity, or it will show you that this is a buying opportunity, right? So now, for example, when it came here, can you see the bearish, the bullish zones that it really made? It made really engulfing candlestick patterns for you to use and buy this market, right? So now also here, when it came right here, it actually used this to always target a 1 to 2, right? So now always when it is above your moving average, look for buying opportunities and also exit immediately if the exponential moving average slope becomes flat. When it becomes flat, just exit immediately. So if you find, or if you want me to break this strategy into scalping, swing trading, or gold only, okay, so comment below, okay, which one you want next, guys. Thank you for watching. Bye.